What's up, YouTube? It's Barry Fisherman. Decided to get out of the office today, get some scenery, get some sunlight. And today, I wanted to give y'all 10 key credit terms that I think y'all should know. Even though they're basic, a lot of people still don't know these terms, right? So the first one, a hard inquiry. A hard inquiry is basically a request. When you go get a credit loan, a car loan, mortgage loan, the lenders that's giving you the money is checking your credit history, your credit report, right? So what they do is that lender then goes and pulls your credit report from one of the 3 credit bureaus, Experian, TransUnion, or Equifax. In result, you don't want to have too many inquiries, right? If you have too many inquiries in a short period of time, it's going to be a red flag to the lenders. You're going to get denied, right? Number 2, soft pull. A soft pull is kind of like a hard inquiry, but it doesn't get reported to the credit bureaus. So the lender will most likely, some way, somehow, get your banking statements or information to see your transactions. Based on how much money you have coming in, they will approve you based on that information and give you the ideal loan for your banking statement, right? And number 3, a secured loan. So just like any loan, you're requesting money. It could be a secured card. It could be a credit line, right? Secured means that, hey, I'm requesting money, but in return, I'm either giving you money, the title to my car, or my house. So basically, if you default on the loan, default means not pay it back. They will own that house, your car, that money, whatever it is, it'll be gone. Number 4, unsecured loan, which is like your regular credit card. With an unsecured loan, that will result mostly in a hard inquiry, just like we talked before, a hard inquiry. So that lending company will get your credit score, credit profile, and say, hey, this person can be trusted. We can give them this money. In good faith, saying that they assume that you would pay the money back, right? 5, utilization. So say you have 5 credit cards, right? And they all have balances. So the total amount of credit of those combined compared to how much you're actually using in total will give you your utilization. So if you download the Experian app and you become a member, it will show you the percentage of how much credit you are using at the moment, right? That's what utilization is. Idealistically, you want to keep it under 10%. That's the best way to go about it. You want to keep utilization low. If it's over 30, you're pretty much considered high risk. You're using too much credit. And number 6, authorized user. So with credit cards, you could actually add a person on persons or persons depending on the credit card. So sometimes you can add one person depending on the card. Sometimes you can add more. So with the card, when you add a person, say your mom adds you as an authorized user to a credit card. So the credit history of that card will be on your credit profile, right? That's what authorized user is. You're an authorized user, but in some cases you're not actually using the card. You're just getting the credit history. That's how some people get ahead, right? Right? Number 7 and 8, primaries and trade lines. So primary is basically like your own credit cards, secured cards, your own loans. Just like the last term, right? Authorized users. That's where the trade lines come in. So if you go on tradelinesupply.com, you'll see trade lines for sale. So basically, you're renting other people's credit history, right, for a fee, right? But the banks are starting to catch on. So trade lines are starting to be, less impactful with you trying to get a big loan or whatever. So it's better to just get your primaries now, get your secured cards now, build your own credit history with your own credit cards, your own credit lines, right? Number 9, installment loans. So basically, it's having a loan. It's basically like subscription. You pay a monthly fee, and it's saying that, hey, this person owes $3,000, they're paying $30 a month, but it's showing good credit history. It's showing that you have good payments, you're on time, 100% on time. And there's actually websites that you can sign up for to get these installment loans that will show on your credit profile and send to the credit bureaus, right? Which is good. And last but not least, even though it's simple, a line of credit. So a lot of people get confused, like, hey, what's a line of credit? It's simply just a credit card. That's all it is, line of credit. So those are my key terms. For your homework, I want you to go home, talk to your family, talk to your coworkers, and say, hey, you know what a trade line is? More than likely, they're gonna say no, right? So now you watching this video, you have learned some financial literacy. So be looking forward to the next video where I go in more detail and more explanation on credit or IT, whatever I decide. But this is Barry Fisherman. I'm out. Take care.